YouTube, how's it going? Now, the title of this video says exactly what this video is going to be about. It's going to be straight up, brutal honesty, and it really encapsulates this video today, the whole reason I came on the social media space 11, nearly 12 months ago. I've always traded privately in the background. I've always been very private about it. I'm obviously 10 plus years in now, but obviously I made the decision to hop onto social media nearly a year ago because I am sick and tired of seeing such poor and bad misinformation about trading, what successful trading looks like, how to set yourself up properly so you do succeed, and all the other noise and all the other crap that comes with the industry, which I'm sure you've all seen. So pen and paper for this one, because I'm going to give you that blueprint and that framework that you need and that you can swear by. And if you do stick to it and you do work on these parts of this framework, you will put yourself, I promise, in such a better position. If there's certain parts in this video that you don't like, I'm just being honest. These are all home truths. If you don't like the sound of them, then perhaps trading necessarily isn't for you. And that's okay. That is okay. But if trading is for you, listen and watch this video to the end. So let's initially start with what actual successful trading each month, each quarter, each year looks like. The S&P 500, the benchmark index that hedge funds, institutions benchmark their performance off. The S&P over the last 10, 15 years will return you anywhere between 7%, 7%, anywhere to sort of 12, 13%. On average, it will fluctuate, of course. Any hedge fund or any institution that outperforms that is considered fantastic. So you're looking at a fantastic hedge fund making anywhere between 13, 14% into maybe 20, early 20s, but even that's completely and utterly exceptional. So it's the exact same for retail trading. Your approach should not be, how can I make 10, 12, 15, 14, whatever percent a month? It's how can I make that year? Now, I know that sounds like it's tiny amounts, because most likely if you're watching this video, you're trading with a small amount of capital. It might only be 4, 5 figures. But this is why the beauty of today's trading day and age, prop firms are incredible. Successful trading looks like making 2, 3, 4, maybe 5% a month. Now, of course, that's going to fluctuate. Some months you might be 1% break evens. Other months you might have an absolute stormer and make 8, 9%. But then obviously other months it'll all even itself out. That's what proper trading returns look like. Stop believing what you see on social media around people flipping accounts, even having 10% months, month after month after month after month. It's just not how it is. And it's not sustainable. It's not possible. That is what returns look like. End of. And this is why, if you can secure high amounts of capital through the beauty of prop firms, this day and age, FTMO obviously being the main leader, then you're laughing. You're making 4 or 5%, which is a great month, 200, 300k amounts of capital. That's incredible amounts. And in terms of a monthly income, that puts you in the top 1%. Top 1%. So that is what you need to focus on. Getting that 1%, 2%, 3%, 4%, 5% months. That's proper trading. Next up is strategy wise. It's probably what most of you are watching this video for. You might see on the social media space and online space that everybody does day trading and intraday trading, and everybody live streams, and everybody tries to make 10 pips, 20 pips, 30 pips, 5 pips, scalping, all this BS. Now, don't get me wrong. There are a tiny, 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 tiny percentage of intraday traders and scalpers out there, but you'll never know who they are. What institutions again look at, we are scoping positions out months and weeks in advance. Proper trading is much, much more higher time frame and much, much more swing trading. Don't get me wrong, as I said, there's a tiny percentage of intraday traders that make it. But again, double down more on swing trading, double down more on higher time frames. If you are a day trader and you are struggling at the moment, there may be something here that you're massively missing. For me, when things really started to motor along in the right direction when I was a year or two in, it's when I started adopting a lot more higher time frames. And I remember it like yesterday, because it was almost that eureka moment. Get your monthly, your weekly, and your daily in sync. And you might be thinking, you might just have heard that and thought, monthly, weekly? You never hear about that online. But there's a reason so many people fail in this space. It's It's because everybody is listening to the same sorts of advice that's nonsense. Get your monthly, weekly, and daily in sync. From a day trading, a swing trading perspective, obviously where you're taking maybe 1, 2, 3, 4 trades a week max. Get the weekly, daily, and 4-hour in sync. Try and execute off 1/4 hour. Ideally the 4-hour, because it's more trustworthy. Confidences are more respected. Structure is more respected, or breaks of structure are more trustworthy, and we can use them to then forecast new areas of interest. But the higher time frames tell you the picture now, and they also tell you the picture in what 3-4 days is going to look like, 1-2 weeks is going to look like. I promise if you go out, you zoom out to the higher time frames, you're going to have such a better time. Price looks nicer, price swings nicer, it's easier to read, it's easier to see when things don't get respected or do get respected. It's just going to be the better type of trading, less emotional, better risk to rewards. You can sit on your hands a lot more. You can crack on with whatever else you want to in real life. Swing trading, or even day/swing trading. So you might hold a position for 1.5, 2 days, anywhere to then maybe a week, week and a half. That for me is what I do, and it works so well. Try it. So if you've watched my videos, or you've watched a few of them, or you've been watching me for months, you will know that risk management is the biggest thing that keeps you profitable in this game. Now, as important as that is, I'm actually going to slightly talk about something different, about how to pressure advantage and increase your percentage gain and increase your returns, even with a smaller amount of capital, without over leveraging, without over risking, because that's where everybody goes wrong. So when you have had, and this is what fantastic traders do, when you have found that your area of interest has been respected, that your initial trade is running really nicely, that is when you then start utilizing scale-ins. So that initial position might be 3%, but that's when we then scale in maybe another 0.5% or a 1% once the initial position's risk-free. And so that trade can sometimes end up being a 4-5%er. And that's how you really try and scale your capital, even with small amounts. But you're doing it properly, and you're doing it the smart way, instead of trying to over leverage or trying to stack lots of trades in your favor. It doesn't work like that. You're going to lose in the long run. And this is where it comes back to higher time frame trading again. If you're a lower time frame trade on the 1, 5, 15 minutes, your initial entry is already on a small time frame with a small target in terms of number of pips. You've got no room, you've got no space to scale in. What if though you're taking a trade on the 4-hour, the daily, even the 1-hour sometimes, when your targets are 60, 70, 80 plus pips? You then have room to scale in and further your strength of that position and percentage gain. That is what us expert traders do, and that is how we drive consistent results. Because we all have losses, but if we minimize those losses and then our winners, we let them really run as we do, this is where the money is made. Okay? I cannot stress that concept enough. So when you hear people online say, oh, people who only risk 0.5 or 1%, they don't believe in their strategy, they don't know what to do. No, it's a load of crap. It's a load of nonsense. You keep your risk super small, but on your winners, your pressure advantage, and you double down on that winning trade. That's where the money is made. And my final point, guys, just so I don't ramble on too much as always, because I don't like doing that. I like you getting the right information from these videos and getting in and out of them. Don't give up. It's such a hard industry. It's such a hard skill to master. There's been hundreds of times in the last 10 years in those earlier phases where I've wanted to give up. You question whether it's even possible at times. You think you've got a decent run behind you in terms of wins and information, then it all seems to fall apart again. Don't give up. The chances are, if you're watching this, you're struggling. You just haven't found the right type of education yet, the right approach that suits your personality, that suits your risk tolerance. All of these parameters make a massive difference. But because there are so much BS out there, I'm not surprised there are so many people struggling 2, 3, 4 years down the line, or struggling to find consistency still, or struggling to get any form of payouts, because there's so much nonsense out there. And this is the sole reason that made me finally take the leap to come online a year ago, just after Christmas in January 2024. Because I'll be honest, I don't like speaking on camera, but it got to the point where there's so many, you've all seen the people we're referring to, so many bad people out there that even seem legit, yet they still have no clue what they're talking about, or they fake X, Y, Z and results. And it's a horrible industry in terms of online. But back to the original point, don't give up. If you keep turning up every day, you keep working hard, you invest in your education, really double down, you will get there, I promise. And stop breaking promises to yourself as well, or breaking decisions in your head. Chances are, again, if you're watching this video, you have made your fair share of mistakes, like we all have in those infancy and learning stages. Stop breaking them though. Making one mistake is okay. It's how you learn. It's the best way of learning, isn't it? On reflection. But don't make it again, because that's when then again you start leading to all sorts, and you go down that vicious spiral of inconsistency. Don't break your promises. Learn from your mistakes. Make them once, but don't make them twice. Journal, journal, journal. Backtest the hell out of data over tens and tens of years. That lessens the emotional time that's spent around your trade. That increases your strategy and your edge, and coming together with time in the market that you can't substitute for anything else. You will get there, I promise. All right. So guys, I hope that's helped. You know, there's a reason so many people fail, and I've covered obviously a lot of these reasons in the video. But as always, thank you for watching. I appreciate it. And if you found my channel, I appreciate every comment that's made. Yeah, I'm so glad I did come online in the end, because the people that we have helped so far, there's nothing better than getting that message saying that thanks of approval of getting them into the place they wanted to be in. So as always, guys, have a great rest of the week, and keep your discipline super strict.